Hello, folks. I hope you guys are okay. As we wait for the rest to join, we can start and have some few insights before the NFP time. We can start with the index, because as you know, we use this dollar index. Is my mic okay? Kindly guys confirm. Yeah, I don't know if my mic is okay because I'm in an open place, not in the office. Okay. We have been monitoring the dollar index, the euro dollar, pound dollar, dollar CAD, and gold. Those are the pairs that I usually do analysis on. Not only because they're my favorite, it's because I just want to show you that have those favorite pairs that you're supposed to follow. Don't follow all the pairs in the market. Just select 2, 3, or 4 pairs to follow so that it will be easy for you to keep track of the movements of those pairs, how they move. When you keep track, you'll be able to anticipate the next move. Yeah. As I usually say, unlike when you're monitoring around, let's say, 10 pairs, you trade this pair today, tomorrow again, you're on a different pair looking for an entry setup. By the time you come back to the pair that you traded the other day, you don't even know where the price is at that moment. Then you start analyzing. So that will keep you holding behind. Have few pairs that you can be able and manage to monitor. Anyway, don't start ranting at the moment. Let's start with the dollar index. Dollar index, it's bullish. The main trend, it's bullish because if you can be able to see in daily time frame, we are still bullish and they've been bearish. They have been bullish. And last week, it was last week when we retested this weekly mitigation block, targeting the buy side liquidity that was made last week. This is last month's high. That has been our liquidity draw. That's why we have been looking for buy setups on this dollar index. So it's still bullish. And again, if you look at 4-hour time frame, you can be able to see that the weekly high, which has been our liquidity draw, is still drawing the price, even if it's yet to take out that high, but it's still our liquidity draw. And we expect the price still to continue being drawn upside. But since the price may not move just one way like that, we expect the price always to be making corrections after every impulse. And as we can be able to see here, we have our impulse move. So we may expect a correction before another impulse. That's the first insight. Secondly, considering what the Fed chairman said, Powell, on Wednesday, about that the tampering of the dollar, which was supposed to start mid of this month, mid of November. That's like the next 1 week from now. Around mid here. They say that that's when possibly the tampering may start. And whenever we see tampering in dollar, it gains strength. And you can be able to see, since we are still expecting the next 2 weeks, about next or 1 week, the dollar to gain strength, we expect the continuation of up move. And since the market has already made that first impulse, we may expect a correction before the dollar gains that strength that was mentioned. So that's why, according to me, I thought that if these guys may take out this high, we'll be able to get a correction back to discount of this impulsive move before we continue with the uptrend. And this uptrend, which is possibly to start by next week or the other week, when the tampering activity starts, that was mentioned, that's when it's likely to start. And as you can be able, if this is our trading range, we expect the price to go back to discount. Yeah. And our discount is these zones, the discount premium arrays. Oh, sorry, the discount PD arrays here, which is this one. So today, when this news may be released, there is a probability that we may see some weakness in the dollar in preparation for the strength in the next few weeks. So we may expect a correction to this area before we proceed up. That's according to the dollar index. And as you can be able to see, according to the strategy that you use, we already have a breakout structure here. So we expect the price to seek internal liquidity. So we'll be able to drop before we proceed up. And the drop might be the trade, today's trade. Okay, let's see another pair. That's the euro dollar. Euro dollar been bearish for a long time. Yeah, it's been bearish, and we had a complex pullback back to this 4-hour, and then we had the drop. Now, our main focus is here. We had this drop from this H4OB, and what we were able to see, we had a break of structure. Remember this? According to the analysis that I've been doing on the other days and uploading, we were able to see we had a break of structure here. I need to name this. This is our break of structure. And this is our trading range. That is our trading range. And now the other day, when was it? That's on Wednesday, when we heard from CNews, the price returned to this breaker, and at the same time mitigated the 50% of the trading range. See that? And that's when we were able to get the drop. And so you can be able to see the price is still to break the structure here. And there's a likelihood that they may not break the structure at the moment. That's probably to next week when they will be dropping. But for now, there is liquidity zones, external liquidity zones like this low here. We have an old low here. We have yesterday's low. Those are our external liquidity zones that I'm looking at. We have these lows. These lows need to be swept before we make another move. And what else I wanted to mention? Now, when you look at this, now this question goes to the mentorship class. Wherever we see a break of structure, and this break of structure, it is composed of a stop hand, which happened here. You can be able to see our pattern is like this. There's a stop hand here and a break of structure. This break of structure gives us a clue that we need to see price seek internal liquidity. And among the internal liquidities that we expect the price to seek is this breaker and this void, which was filled halfway. If you check in how 1 hour time frame, you can be able to see we had a bank level here, And this is the liquidity zones, and this is yesterday's trade drop target achieved, so I don't need this one. Let me just get rid of them because they just identify my chart. Okay. Okay, they just be as you can be able to see, don't need this right now. So after the break of structure and our stop point here, we had this drop. From this drop, we expect the internal liquidity zones to be mitigated first. And as you can be able to see, we have a range here. Oh, I'll show you that in lower time frame. What is this one? This low has been taken out already. We have yesterday's low and this one. So we expect these lows here to be raided first before we seek to fill these fair value gaps and 50% of our, the price to go back to the premium of this range, which is around here, another one here, so that we'll be able to be dropping maybe from next week. We are bearish, but before we continue the bearish, we need to mitigate, and the price needs to do a mitigation and push the price back to premium before we see the sell again. So there's a probability that when the news will be released, we'll be able to buy up to this zone here before we sell. That is my anticipation, because in 1 hour time frame, you can be able to see this will be the trading range. After break of structure here, this will be the trading range from this high to this low. How am I doing? Okay. So I will expect these zones. Okay, let me draw so that you can. I expect the price to go back here before we sell again. So contrary to what we saw in the dollar index, whereby we are supposed to sell before we buy, in the euro dollar, we are supposed to buy before we sell. So in lower time frame, that is M15, if we be able to see any significant pattern at this zone, we'll be able to buy, and our targets will be this highs here. Let me see if I can be able to see anything in lower time frame. This is M15, and in this M15, this is yesterday's low. Okay, and can you be able to see that one? And this is our A. We had manipulation 1, manipulation 2. So there's a possibility that we have our distribution phase up to check out this high, targeting this high and end of this one. And this was the high of yesterday. No, this is not yesterday. But I'll be buying from here if I see patterns that go in line with the my rules of taking the trade. By the time the market, the NFP price will be released. So I'll be looking for buy setups here. I'm not signaling you to buy, but if your strategy gives you a pattern or it complies with the rules that you use to trade, then it's a good conference that we can buy together. But for me, this one, I'm having an insight of buying this pair before I'll be selling. That's from next week or possibly that. Now let's look at the pound dollar. Pound dollar again. Here we go. Okay, sorry for that. Where are we? Oh, it is the dollar. The dollar. What is it? This is a pound dollar. This cable, last week we analyzed that we had to get a dollar and this drop. So I think I don't need these ones. The roll is done. Good. Now, as you can be able to see, after yesterday's news, we were able to see the price leaving an imbalance here. This is an imbalance. Oh, this was the fair value gap here, so we don't need you. It's already mitigated. This low has been taken out. Okay, can use this to show us a break of structure. Yeah, the drop. And again, this pair is still bearish, as I usually sing. It is still bearish, and we'll be looking for sell setups. But for today, there is a possibility that we may buy before we do what? We sell. Because if you can be able to see here, I don't think I need this one too, because these ones are already mitigated, so I don't need you. And I don't think I need you too. So that we do, yeah, equal lows. This one, don't need them. I don't need you. Okay. No. Yeah. Oh, I was saying that after yesterday's news, we are able to see that the price left an imbalance here. I think this one is making noise. This is an imbalance, and this imbalance, before the market proceeds lower, at least we expect the market to balance before we proceed lower. And in this daily time frame, we can be able to see that our bearish daily OB is this one, and this OB is here. Okay, let me use both of them. That's our daily bearish OB. And if we check in 4-hour time frame, in 4-hour time frame, can be able to see there's an old low here. So if they manage to take this out, we'll be buying to this one before we sell again. But again, it may not take out this low. Yeah. Before going up. See, if the price may not take this one, it will be our future target, whereby it will be our liquidity draw once we have a mitigation of internal liquidities. Now, let's look at our point of interest here is now our bearish daily order block here, because you can be able to see this is our breakout structure, and they bought here before they sold. Again, we have a mitigation block. Have another mitigation block here. Just a minute. I try to. Okay, yeah. This red candle here is our mitigation block, bearish, which is also in our bearish daily OB. Okay, so after this drop, we need to see the price to go back to premium before we sell, because after the breakout structure, our trading range is now this, and this is the 50% of this range. And in this range, we'll be able to see there is a void here and some fair value gap here. So that's why we are anticipating the price to go back to fill this imbalance and back maybe to this bearish OB here, and before we sell again. Before we sell again. So, and you can be able to see this is a 4-hour bullish order block where the price is at the moment. And as I usually mention, is that wherever you see an OB that is opposite to the order flow that the price is at that moment, when you see an OB that is opposite to the order flow that the price is at that moment, don't ignore that OB, because usually the price uses these order blocks as a short-term support or resistance so that they'll be able to do a correction before the next impulsive move. That's what I usually sing here. I tell you every time we make analysis, and I'll be able to spot this. So get that from me, that wherever you see that, don't ignore an OB that is the opposite to the order flow that you're in. Of course, that OB is supposed to be violated, but the price may use that OB as a short-term support or resistance before the next what? The next impulse move. Oh, this was the yesterday's trade. We don't need this one now. It's all is done. Now, I'm seeing a kind of behavior here, and this behavior here is an intraday range setup AMD, where we have our A here. This is our A. It's likely to be our A for that. Okay. Let me use this. This is likely to be our A. And this drop that occurred during London session, there's a possibility that it is our M. Okay, this might be our M. And so we may expect our D here. And this, let me do this a little bit. We need to see that back to this before we go. So this will be our M and this will be our D. So it will be a nice setup if that is the AMD that I usually tell you. It gives a very, very, okay, let's see in a lower time frame what we have. That is M15. As you can be able to see, the price may give support at this zone, short-term support, so that the price mitigates the upper zones before we drop. And in M5, let me see, I can be able to see any kind of structure. Okay, can be able to see a pattern here. The low being taken out. A break of structure. Now we are in a consolidation. Liquidity here, and we have this OB. So there is a possibility that we find a spike to this OB before up. That's an imagination. I'm not saying that that's how the market will react, but there's a possibility that the price may react that way. Yeah, you know, we are not the market movers. We are just speculators. We just speculate what kind of movement the price is likely to make every time that what? I don't know. Oh, let's see the next pair. That's the dollar card. Remaining just a few minutes to go. It's 30 minutes to news. Okay. USDCAD already started their move. That was too fast. So this pair too has been bullish, and it will still be bullish because we are expecting that tampering to occur. So that will affect its pair again to continue being bullish. And because again, in technically, you can be able to see there is a fair value gap here in daily time frame that has never been mitigated for a while now. And in this case, we can be able to see that this is a bearish H4 OB. And I said, wherever you see an OB that is opposite to the order flow, expect that OB to be used as a short-term support or resistance. So this one, I expected it to be used as a short-term resistance before, so that we drop to mitigate the internal liquidities before what? We proceed with the uptrend, targeting this big area here. And as you can be able to see, similarly to the dollar index, this was our impulsive move. And after this impulsive move, we were able to see a break of structure. So as usual, as once we see a break of structure, the next thing we expect is the price to seek internal liquidity. And among the internal liquidities they seek is the order blocks and fair value gaps. But again, we expect the price to go back to discount before we expect the next impulsive move. Yeah. So here, when I look in 1 hour time frame, in 1 hour time frame, we can be able to see this is yesterday's high already taken out. Buy side liquidity has been taken out right into the OB. So aggressively, this was a nice sell here so that the market will get you in. And that's why I had to take my take profit here on the trade that I took here. I was supposed to close them here. So not I was supposed, actually, this was my take profit when this high to be taken out. When it was taken out, my trades were closed and I was done with the week. But now we expect this drop here because the buy side liquidity has been taken out. So we seek internal liquidity, which is a sell of by filling this gap, and we have a 4 hour OB here, this one, and this is a 1 hour OB. But also we have a bank order price level, which is this big figure. So this may be the target, and as you can be able to see this one, we have another OB here of 1 hour time frame, which is at discount of this trading range. So when the news out, I may be expecting a sell to mitigate these zones before we proceed up. Okay. And the entry triggers is in lower time frame, that is M15 and M5. Those are my entry time frames, M5 and M15. That's where I usually look for patterns. Okay. And the next, so that's what I'm looking at, the dollar card. That is what I'll be looking at, the dollar card. And another crazy pair here is gold. Gold usually behaves funny, but most of the time you find gold goes in line with the USDCAD, but today it's a NFP, and we have the dollar that is supposed to be affected. And whenever the dollar is affected, gold is supposed to be bullish. And can be able to see here, there is unmitigated zones below here. And the buy side liquidity has been taken out. So I don't know if the price will come back to mitigate these zones first before we proceed being bullish. I don't know, because I don't move the market. I only anticipate and they react according to the anticipation. Yeah. So we will see how the price will react here. But my key areas I expected, because the buy side liquidity has been taken out, I expected this kind of reaction. Yeah. First target to be this breaker here. Second target, this bullish OB here. And you can be able to see in 4 hour time frame, the fair value gap was from this to this. So again, this one needs to be mitigated too. So there's a probability that the price will go back down here. And from there, we may see that there's a possibility. So we continue seeking the higher levels. And also, it may be bearish, totally bearish, because in daily time frame, of course, it's bullish because this was our return to daily order block and bullish. But the price did not break the structure here, only the wicks closed above. So that does not give us the guts to continue buying this pair from this. Please to expect a correction before we continue buying. And the correction may be back to this breaker or the OB before we do what? We continue buying, because if you can be able to see here, take this as a stop trade, a stop hand, then this is a break of structure and this is a fair value gap that needs to be mitigated. And our bullish OB is here, the source of the move that broke that structure. You see that? Yeah. And this is our void that needs to be filled before we proceed. So there is a possibility that we get the price up to this zone before we seek higher levels, because in daily time frame, there is this equal highs here, and there is this, so there is more areas that needs mitigation. And if we use the other strategy that I told you, what is this called? Dribble pattern. We can be able to see this is our swing, and 1, 2, 3, our swing, and the fourth candle is this one. So in the fourth candle, we mark up to that's all. Yeah, the 50% of this candle is here. So we expect a return up to this zone, then we proceed up. So in lower time frame, you can be able to see that's where again the OB is. So clarify that dribble pattern. Not really. Can't tell you that right at the moment, because right now we're just focusing on anticipating what we may expect at the news. But that other dribble pattern, that is a concept I'm gonna teach this next class that I'm admitting, that is November, December class. That concept I'll be able to teach them. Yeah, that concept is very simple and easy to master, because you don't need to know much. You only need to know how to identify those candles, draw the levels that we expect the price to react on the candles, and then we use our fib to give us extra confluence before we get that, before we take those trades. And also the fib gives us our targets, like take profit 1, 2, and 3, and the OTE zones, those are the entry zones, and our stop loss usually it is 10 to 20 pips at most, targets 50 to 100 pips if you swing trade, short-term swing trade. And if you are a day trader, you target 30 to 50 pips, that would be enough for you. So guys, that's what I'm anticipating on this pairs, and thank you for attending. And whenever you have another question about our coaching services, you'll be able to reach us through Telegram or text us through WhatsApp. You can be able to reply. But for now, thank you guys, happy trading, and good luck.